break. Michael Kurtz, Chief Asia Equity Strategist at Nomura Holdings, joins us on the program. Michael leads the equity strategy team, which was ranked third by Institutional Investor magazine in 2011. Good to see you once again, Michael. So were you shocked by what the Premier had to say?
Surprised, maybe not too shocked. I think we have to keep in mind this is Premier Wen's last National People's Congress as Premier.
So he goes out with a bang? Is that what you're saying?
Well, it means that this is a bit of a swan song in any case. So he's really, I think, not speaking to sort of project what policy is going to be like over the next 6 months. He's literally, I think, trying to cement his place in China's history books as a man of the people, a man who is a proponent of things like political reform, housing policy that is geared towards the needs of the masses, and so on. He's not so much telling you where policy is going, he's only really telling you how he wants to be remembered by history.
That's right. Actually, really reflective in his last press conference, talking about, some of the regrets he has in office, wanting to visit Taiwan, et cetera, et cetera. But really the big, I would say, the stock mover was his talk about property curves and how they're going to stay in place. Otherwise, we're going to see chaos in the property market. Really?
So again, this is one trying to connect with the common person who I think still is, to a substantial degree concerned about affordable property getting ahead or getting away from them. But let's keep in mind also that the Premier very clearly said, or sort of laid out a rule, if you will, that property prices should roughly keep pace with the increase in household incomes. And if we take that as our sort of policy guide, let's keep in mind that urban household incomes rose about 15% last year, and rural household incomes rose by more than 20%.
You have wage inflation of double digits right now in mainland China. So what about the markets itself? I mean, what a reaction we saw with Shanghai falling 2.5%, Shenzhen down 4%, and that kind of dragged down Hong Kong. But would you say that China is a place to stay away from right now?
Not at all. This looks like another overreaction, not unlike the way the market seemed to have taken a little too seriously the 7.5% GDP growth target that was mooted in, again, Premier Wen's speech opening the National People's Congress just a week ago.
Okay. So where are the bargains right now in China, then? If it's not a place you stay away from, what do you buy into? Well,
there's still plenty of value across the financials sector in China. So we're looking at the banks, we're looking at the property names and the insurance names. I think with the decline in CPI that was reported in February, now down to just 3.2% year over year, there's a lot more room for policy to continue to ease in terms of more credit growth and potentially even lower interest rates, and that's obviously going to be a key catalyst for those financial stocks to keep moving
so
on.
If you're advising people to buy into certain sectors in China, I guess you're not in agreement with Adrian Mowat at JP Morgan saying that we are already in a hard landing scenario on the mainland.
Oh, far from it. Far from it. I think what we have is an economy that has moderated a bit since the levels of, let's say, 12 months ago, but we're still looking at GDP growth that even in Q1, which we think is the bottom in terms of demand growth, is going to be well above 7.5%, and that's nothing to get particularly tragic about.
Okay. Best buy across Asia then before we go.
Still China right now. It's the deepest value in the region. There's still plenty of room for monetary easing, and it's one of the markets where investor skepticism is still high, which is the wall of worry that stocks get to climb as we go forward.
Okay. Good to see you, Michael. I like listening to a contrarian call today. Michael Kurtz of Nomura Holdings.